Hey, ladies and gentlemen, boys and girls, welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 5th of May, 2023. So yeah, welcome everyone. Welcome to this Friday's morning session, where we're going to have a very quick look at the markets, a few of the charts, just to see how the whole week went through, how maybe we can prepare ourselves for next week. But yeah, guys, before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here from that little corner in there, and I'll be back in a bit. Okay, so now then, also just before we jump into the charts, just a quick update on our Easy Markets website, which you can always check out for more information about us, guys. So now then, let's jump into the charts. Look, I have a bunch of instruments that I want to go through. I'll be quick actually on those. I mean, some of them are I'm gonna dive in a little bit more deeper, but some of them are just kind of just to mention, to show what's happening and what happened during the week. And the first one is, of course, Nikkei 225, as always. Look, in the beginning of this week, I talked about this. Nikkei is closed, by the way, today. But yeah, the futures are still kind of moving. But of course, we can, if you're trading Nikkei, then let's see how we can kind of position ourselves for next week. Look, previously I talked about this little short-term upside support line taken from the low of the 6th of April. Now, so far, it seems to be working out nicely. I don't have this other one drawn here, for example, from somewhere around these areas. You can, of course, don't get me wrong, you can, but again, if it works for you, because to be honest, anything what we will draw here still will be a little bit on the tentative side. So don't really rely much on the trend lines. I think it's good to have them for reference, but just like I said, don't purely rely on those trend lines. So now then, like I said, with Nikkei, look, we got a hold up near this upside line, near this highlighted territory of mine. I talked about this. This area is between the 28,733 and 93 levels. Let's see if we can get a rebound. So far, I'm kind of considering that idea, and if we do get that rebound, then yes, I will go back to the upside. For the downside, I would like to see, and this is where I will redraw a few lines, I would like to see a drop somewhere below this 28,558 territory in order to go lower. Until then, I am just observing the price action. I'm not really doing much. So, yeah, just like I said, for now, it's kind of a bit of a waiting game, but it might deliver the fruit. Let's see if we can get a clear move here. So for the upside, as I said before, I need to rebound from this upside line. For the downside, a drop somewhere below this 28,558 territory would be ideal. Just a quick check here, guys. I hope everybody's okay. I mean, I hope you all can see me and hear me well. Yeah, I think that I can see people joining in. So yep, just if you can drop me a quick hi, that would be fantastic. I mean, I wanted to check if everything's working properly. But yeah, guys, look, ASX 200, just a quick update on that one. Look, I talked about this this whole week. I said to you that if we do drop below the 7,217 territory, then yes, I'll aim to the downside. Ideally, my targets are the area between these 7,064 and 76 levels, but initially I'll target that 200-day EMA. And then, yes, we'll take it from there. So, yeah, we got that test of the 200-day EMA. We rebounded back up, and we are now currently struggling to move back above the 100-day EMA. So this area is providing fantastic resistance. If it continues to do so, then, yes, I will consider something like this to be a logical possibility. Now, for the upside, even if we do push back above the 7,217 territory, Yes, I will. I will kind of lean maybe a little bit more towards the upside, but I think that I'll get a little bit more comfortable with that idea if we do push back above the 7,278 territory right here, at least. Mustafa Sepahi, hi to you. Thank you very much for leaving that comment, because I just, like I said, wanted to check if everything's working okay. But yeah, I can see the messages are coming through, because look, I mean, I sometimes have this issue here on TradingView, because sometimes the messages are lagging. So hopefully, yeah, that's coming through on time. But yeah, works well. Fantastic. Thank you very much, Mustafa Sepahi. Yep. Look. This is the, like I said, the simple game plan here on ASX 200. So let's see, of course, how this is going to play out. But for now, I'm just observing the barrier here, the 100-day EMA. If that continues to provide resistance, then yes, another decline could be possible. So yeah, Nifty 50. Look, this one, I talked about this, and I said to you that previously that if we Mustafa Sepahi, thank you too. Yeah. Look, with Nifty 50, I said to you previously that if we stay somewhere above that short-term upside line, then yes, there is still a chance for this one to push higher. And look how well, again, the barrier here, this 18,267, approximately around here, is providing good resistance. So basically, I can say that now, because the arrow should have been drawn maybe this way a little bit. Yes, ideally, I'm kind of aiming here. But this is, by the way, this 18,342 is the highest point, the current highest point of this year. So that's why I'm so kind of, sticking to this level. I really like that level. But of course, as I understand, I mean, the market doesn't always give me what I like, I wanted, so that's why I'm just going to go carefully here. So if we do clear this barrier, this 18,267, yes, I'll aim a little bit higher for that current highest point of this year. And if that gets clear, then yes, this could open the door towards some much higher levels. Now then, let's jump into Nasdaq 100. Okay, guys, of course, the big day today for traders, those who like volatility. I mean, the big day was also on Wednesday, but today also could be a nice one, because it's going to be interesting to see if actually the job numbers come out better than the forecast. Now, my problem with the forecasts is currently that, in a way, the previous number we had on NFPs was 236 here. Of course, that will get adjusted once the number comes out, but currently it's sitting at 236K. The forecast is for 180K. So this is where, like I said, yeah, if it's going to come out better than the forecast, okay, that's wonderful. But will it be better than the previous number? So this is where the tricky bit comes in, because, for example, if it does come out lower, let's say lower than the previous number, but higher than the forecast, still we're on a decline. Still, we're on the decline, and in a way, this is what the Fed wants to see. So maybe this could remain here as it is right now, because as you can see, for the June meeting, they're not kind of expecting any rates here, any rate hikes, according to the FedWatch tool. So 99.3% for no rate hike. Well, let's wait and see. We had similar situations before, so let's see. Well, let's see how this is going to change, because we're still going to have to go through inflation numbers as well. So that's yeah. Let's not rush into anything. But of course, if the number suddenly comes out much better than the forecast and the previous number, well, this is where I think that this thing could shift a little bit. Maybe we could see, the chances for another 25 basis point kind of increasing here. But look, we don't have the crystal ball. We just want to see what's going to happen first and then take action. So for now, look, from the technical perspective, what I said to you previously, that as long as we stay inside this range and this barrier here holds, and this is what I talked about in the beginning of this week. If this 13,350 territory continues to provide resistance, we could see another decline, and especially if we do fall back below the 13,220 territory right here, I will consider a move lower. And so far, it's working out nicely. In order to go, but in order to go lower, in order to kind of, let's say, get a little bit more excited with, let's say, the downside, I would actually prefer see an exit from this range, because at this point, I mean, I really don't like ranges, and I really try to stick away from them. If you do like range trading, fantastic, guys, this could be for you. But for me, at this point, I'm just observing the price action, and I'm waiting for this one to exit the range. Let's see which way that's going to happen. But of course, as I said, a breakout isn't required. Dow Jones Industrial Average. Now, this one's a little bit more interesting. Now we're seeing a nice, healthy decline, I would say. Because look, we broke the upside line here, and this is what I talked about. I said that if we do break this upside line and we fall below that 33,800 zone, then yes, I'm going to lean a little bit lower. I'm going to lean towards that 33,350 territory, somewhere around here. And we managed to clear that one as well. So what's happening next here? We are considering further declines as long as we stay below that 33,350. If we do push back inside here, back to the upside, back above this hurdle, I'm going to take a neutral stand, guys, because look, for me, the upside scenario is still valid from here. So I even have two lines here, two arrows. Yeah, in general, my upside scenario is from around here. This upside line can go, this downside line can go. We can get rid of all that, and we can just stick to some of the key support and resistance levels until we see some sort of other, maybe, an opportunity to draw a trend line or something like that. But at this point, I'm just like, yeah, I'm sticking to these EMAs. If we do fall again below the 200-day EMA, once again, I'm aiming for that 33,000 mark. But if that gets cleared, now this is where, yes, excitement could come in for the bears. More of them could be joining in, and we could potentially drag this one all the way lower here towards maybe the 32.5, something like that areas. But of course, we'll not rush into anything. We'll wait and see, and then we'll take it from there, guys, basically. But for now, like I said, yeah, a confirmation break is still needed. I'm kind of cautiously leaning towards the downside as long as we stay below this 33,350. If we push back above it, I'm taking a neutral approach to this one. S&P 500. So yeah, look, this one is also trading nicely in the range, and the same logic applies as on Nasdaq. I need to see a clearance here. And yesterday, look, we had a drop below the lower side of this range, but we still came back by the end of the day and kind of ended the day above it. So what do we need here is, yes, another kind of clear breakout. So for now, I'm not really getting that. My clear breakout would be a daily, the body of the daily candle staying outside of the range. But at this point, I'm not really getting anything like that. So I'm just observing the price action. Look, yes, of course, we're closer to the lower side of this kind of potential range because it's not really an ideal range, but okay. We're closer to this key support zone. Of course, that means that, maybe we could break it again, and like yesterday. But let's see how many times can we have that attempt, because if it's struggling with that, then maybe a reversal back up here could be possible. So just kind of keep that in mind. The German index. Okay, this is one of the boring ones, the most popular ones, and the most boring ones. So we're not really doing much. So I keep on talking about the same thing over and over again. Now, could the NFPs move it? If we do get a strong reaction in the US, then yes, we could see the DAX futures here maybe either accelerating sharply or falling off the cliff nicely. So just for now, the only thing is what we can do here is wait. If you do like this trading activity, congratulations, this is something for you. How long will this last? I mean, this is a tricky bit, because again, we are We're currently today in this big data day, so let's see if that can move it. If it cannot, okay, we'll have to wait for next week. In next week, we let me just actually double check what do we have next week. UK on Monday is on holiday. Okay, right. Retail sales from Australia are coming out, from Europe. I'm trying to find out what's happening. China's, okay, trade balance, German CPI numbers. Okay, yes. Oh, yes, of course, the US CPIs. Yes, how could I forget that one? US CPIs are coming out on Wednesday, so big day on Wednesday. So we'll keep an eye on that one, of course. And yes, from Europe, kind of, we don't have much apart from Britain delivering its interest rate decision as well. Okay, the next week, if you're a pound trader, next week could be for you, because we also have the British preliminary GDP numbers. So yeah, a lot of good data coming out from the UK. Yeah, the main one to watch from the US will be the CPIs, the US CPIs numbers. So yeah, so that's kind of the game plan for next week. So if NFPs cannot bring it out of this range, then maybe the US CPI numbers, or the unless the whole kind of saga with the debt ceiling and the small banking sector or mini banks, you know, in sorry, as they like to call them, regional banks. So maybe those issues can drive this index out of this range, because again, this would have an effect on the U.S. indices, and those could pull, you know, the rest of the indices after them. But of course, a lot of ifs, a lot of, you know, waiting, a lot of if you're already, you know, tired of this, I am with you. I am really tired with this as well. But hey, you know, it is how it is. So we need some sort of like clarity. We need some sort of a catalyst here in order to bring it out of this range. So for now, long story short, I am watching these levels on the upside here, the 16,063. For the downside, I'm looking at the 15,800, or even better, the 700 levels. So, and then we will kind of go from there once we get a clearance of one of those levels. US dollar again. Okay, so this one's a little bit of a mess. I would say this upside line, I have drawn this in the beginning of this week, but I can say that it's not really working well. So let's get rid of it. Now, but one thing that is working is this little hurdle, this 101 zone, and we're still below it. Yesterday we tried to climb back above it, and we did, and we pushed a little bit higher here, but quickly kind of retraced back down and stayed below that 101 zone. So as long as we stay below that, then yes, I will continue targeting the downside. My next target again is the 100.67 and then the 100.42 levels, and then we'll go from there, guys. For the upside, I need to see a push above the 102 territory in order to get a little bit more excited with the upside. Gold, honestly, this one yesterday was okay, before I go further, yesterday I talked about this 2032 territory. We were declining in the beginning of the day, and yes, we drifted lower, tested this area, and look how well it played out. And I talked about this yesterday, and I mentioned this, and boom, fantastic. I'm quite happy about this. We reversed back up. We traveled higher. We almost retested that 2060 zone, and then we drifted back a little bit lower. Now, we are at an interesting spot today. So, of course, NFPs will have its effect on gold, because gold will react to whatever is happening in the US dollar, and the dollar, of course, will get affected by the NFPs. So, yeah, let's wait and see in this one, because again, look, in general, I'm saying that I'm leaning towards the upside, especially if we again push above that 2049 level right here, marked near the high, or should I say near the highest point of April. If we clear that one, then my next target is this downside line, which you cannot probably see because it's way over here. So this downside line is running from the highest point of August of 2020, guys. So if we do push above the 2049 level, I am targeting that downside line again, because look, we did test it on Wednesday. Wednesday. We did test it on Wednesday, and after we had that that Fed decision, that Fed kind of meeting, and this kind of triggered a nice little decline in US dollar, but everybody started shifting their attention to safe havens like yen, like gold, and we saw a nice, fantastic move in those assets. So, long story short, if we do push back above the 2049, I'm leaning a little bit more to the downside. Yes, we are below the 2049 territory, but I'm not really getting bearish on this one. For me to start getting bearish, maybe I would like to see a drop below this 2032 territory, and then we could take it from there. So, if we do fall below this hurdle, below that 2032, let me just clear up this chart a little bit, because I think it's a little bit overcrowded. So yeah, if we do fall below this, I'm gonna lean a little bit lower here, maybe back to that 2000 mark. So let's see. For silver is we reached my target because of what I talked about in the beginning of this week. I said that if we do push through my highlighted territory right here, I will target this 26.09 territory. Boom, boom. Mission accomplished. We tested that area. So my question now, can we go further north? Well, I need a confirmation break. As always, I'm not going to stop saying this, and I need a confirmation break, because now we need to kind of highlight this territory, because I'm wondering if this is not going to end up being somewhat of a range. If this continues to provide resistance, this territory between the 26.09 and 22 levels, if this is going to continue to provide resistance, then maybe a bit of a decline back down could be possible, and we could start seeing this one ranging. But of course, let's not rush into anything. For now, we are carefully monitoring this barrier right here. If we clear it and we stay above it, yes, I'll go higher. If we cannot, if it's just going to give us something of a false breakout, then that's no good, and maybe we could see a bit of a retracement back down. Platinum. Look, today's Friday, guys. I mean, I always like to look at some interesting, very not very popular among traders assets, and platinum, of course. Maybe some of you trade it, maybe don't, but hey, I do like to look at those, and in a way, they do sometimes present themselves with nice opportunities. We have those on easy markets, so you can check us out here. But look, in general, the technical picture here, what I'm seeing is yes, of course, after we had a fantastic rally, we found resistance near this barrier, near the, let me just put this like this. There we go. We found resistance near the 1,135 territory, and we started drifting back down. And now it seems like we're getting closer. We're aiming for that 1,000 territory. Now, it's slightly below the upside line that I have drawn here, but this upside line is a tentative one. This one's taken from the low of the 27th of February. Don't really rely on it too much. I think what I'm gonna rely on a little bit more will be the EMAs, because so far it seems that they're doing a good job. They're working, and also some key levels, like for example this 1036 territory. If we do drop below it, then we will drop below the 50-day EMA, and this could open the door towards that 100-day EMA, shown as the green line here. And around here we could also test the upside line, which if fails, then yes, it opens the door towards that 200-day EMA, which by the time, let's say, if this scenario happens, then this could approach the psychological 1,000 territory, and we could test that one. But again, let's take it carefully, I would say. For now, I am leaning more towards the downside, but of course, according to all the TA rules, I have to say that as long as we remain above a trend line or an upside line, if the trend line is not broken, then this move lower, for example, in this case, could be still classed as a temporary correction before another possible leg of buying. So if this upside line somehow does the job and provides good support, and we see a rebound then, and then we see, for example, something of a violation of this downside line, well, the upside scenario is back on the table, guys. Oil, look at this. Look at this. This 69 territory continued to provide good, well, I wouldn't say support and neither resistance. It just we kind of just oscillated around that territory. So, look, if we do fall again below the 69 zone, I will lean a little bit more towards the downside. If we do fall towards the 66.83 and then kind of take it out, great. That's it's opening the door even further towards lower levels. But at the moment we're seeing a bit of a retracement. I'll try to apply the Fibonacci, although I don't think that this could be something useful here. Let me just adjust this very quickly. Left. There we go. So we did get that 23.6% retracement on the Fibonacci. It seems like now we could go towards that 38.2, but this is only if you draw it this way. If you draw it from this kind of from the recent decline, then you'll see that we have already done the 38.2 and maybe the 50 here. Look, this is very, very subjective. I mean, it's very difficult to apply this Fibonacci. So in a way, you have to stick to one of them, either this way or that way, and see if it's working for you or not. For me, look, I think what I'm going to do here is I rather stick to this Fibonacci drawn from the peak of April all the way to the current lowest point of May. So far, yes, we already did the 23.6. My next target could be, if we stay above the 69 territory, my next target could be the 38.2, around here somewhere near this 71.25 level, something like around these level, around those lines. So just keep an eye on that one, guys. Again, it's a very subjective thing, I have to say. You don't really kind of focus on this too much, on this Fibonacci, because again, it's not as clear as I would like it to be. But at the same time, maybe it could provide some clarity. Either way, if you are looking for something a little bit more reassuring on oil for, let's say, for the upside, well, guess what? A break of this downside line is required. So until we get that, I'm not really, let's say, getting way too excited with higher levels. Yes, a little bit of a correction here back up could be possible, but hey, unfortunately, nothing is guaranteed in this business, so we have to kind of we have to always adjust, and we have to go from what we have. So for the downside, for example, if we start dropping again below this 23.6% retracement on the Fibonacci here, I will aim lower. So guys, oh, by the way, I keep on forgetting to mention, if you do have an instrument that you would like me to cover, and if we do have it on Easy Markets, I'll cover that, guys. So just drop it in the comment box, and yeah, but normally this is the list that I go through. So you can see here on the right, if one of these interests, or if you cannot find something that interests you here, just let me know. Unless it's a stock. Stocks are a little bit, this is something that we're not really touching for now. Hopefully we'll go into this, because again, I really like stocks, and talk about one stock that really surprised the market yesterday was Apple. I mean, fantastic results, good results on Apple, yeah, but still the stock declined, and but I think that the main issue there was the whole uncertainty around interest rates and the banking sector, and again, as always, every crisis all the time, it's the banking sector. So it's like you can't live with them, you can't live without them. So you just have to kind of go with that. Try to adjust yourselves all the time with that. Now, natural gas, guys, also something that I like to look at occasionally. And this one is, look, previously I talked about this, and I said to you that if we do push and stay above this 50-day EMA, this kind of increases the chances for a push higher. and we could then aim for that 100-day EMA. So look, for the upside, I will stick to that game plan. I'm still going to keep an eye on that 50-day EMA. We keep getting these little false breakouts, but then we still drift back to the downside. So in order to go higher, I still need to see a push above that 50-day EMA. But we are getting closer to the psychological $2 mark, and again, if this is gonna provide support, if it's gonna continue to provide support, then maybe a bit of a rebound here could be possible. However, if we do clear this territory, well, guess what? This could open the door towards some lower levels. A forthcoming lower low would be confirmed, and we could start shifting our attention to much lower levels, guys. We could probably start aiming for the levels seen back in September and of 2020, and of course the lowest points of 2020, where those were around that $1.5 mark. So it could be a nice good target. But again, a clearance of the psychological 2 level is required. Cotton, also another instrument that I don't look at very often, but again, it does present itself with nice opportunities. And look at this. I've mentioned this previously, and I've drawn this downside line, and still it's doing its job. It's providing resistance. So we're getting closer to the downside line and with this 85 territory right here. So in order for me to go higher, in order for me to consider some higher levels and at least aim for the 200-day EMA, I need to see a clearance of this whole territory. We're very close. Let's see if that happens. Now jumping into Bitcoin Cash, guys, the crypto world, honestly, it is boring as hell. Yes, at the moment, not much is happening. Maybe we're all waiting for some sort of a catalyst. Maybe that could be the SEC with the whole Ripple case. Maybe. A lot of maybes and a lot of ifs. But at this point, I will say one thing, that look, from the technical perspective on Bitcoin Cash, I'm still seeing this hold up here near these upside lines. Both tentative, but nevertheless providing some sort of support here. Both of them are drawn from the low of the 10th of November of 2022, and if we do continue to trade above those, then yes, certainly there is hope that the bulls could kick in here and drag this one higher. But look, I think that this 119.83, I think I'll have to adjust this a little bit just to kind of keep it more relevant. And I think that the best option is to mark this territory. I think that, yeah, oh, look, actually, yes, it's not ideal. 120, 121, something among those lines, guys, something among those lines, because again, this is not ideal. I really don't like it how it's shaping up here. Yeah, but if we do push, if we first of all rebound strongly from these upside lines, and then we push above the 120-21 territory again, that's where it could become a little bit more interesting for a few more buyers. But of course, then we'll have a problem with the EMAs. Then maybe the EMAs will provide resistance. Who knows? Because they did so recently, and yeah. Let's not kind of exclude that. Dogecoin also waiting for, as I mentioned yesterday in my morning video, we're waiting for another tweet from Elon Musk in order to make the move here. So until then, we're just observing the price action. But on one hand, it's forming something of a descending triangle pattern. On the other hand, we're also forming something of a bearish flag. So actually, in a way, two patterns that are kind of leaning towards the downside. Because again, this could be a pole, this could be a flag, a bearish flag, and yes, but still a breakout is needed. So in order, before we can go lower, a drop somewhere below this territory, maybe not this level exactly, but I would say maybe this whole zone, something around these lines. Again, this is so difficult to predict on this that I would say, oh, let me just adjust this very quickly, guys. So this is so difficult to predict that I think I'm leaving it to, for better times. But again, if we do clear this territory, yes, this could open the door towards lower areas. Now, AUDNZD, very quickly on a few pairs. One of my favorite ones, AUDNZD, is now rebounding from this territory. Look, yesterday, if you remember, I talked about this pair, and I've mentioned that keep an eye on that 1.0683. If we clear it, I am leaning towards the downside. My next target is the 1.0623 or this upside line. And you can see why I really like this pair. Honestly, this is it. Most of the time, it's very technical. It's very straight by the book. And now, yes, we're seeing that nice rebound from this upside line. We're getting a hold up near this 1.0683 territory. So basically, if you're looking for some higher levels, maybe a push, and we would like to say a body of the daily candle staying above this 1.0683 could do the trick, and we could start aiming back to the, I would say, 50-day EMA, then 100, and so on and so on. This level here no longer needed. I think that we can remove that, and maybe we can mark something around here, but or maybe something else. But look, I'll pick up on this later. But at this point, if we do push back above the 1.0683 territory, then yes, and we stay above it, then yes, I'll get a little bit more excited with higher levels. AUDCAD, another one that's becoming one of my favorite ones, and guess why? Well, it's also doing everything according to the books right now. So for now, look, if I get that breakout here above the 0.91 territory right here, if I get that clearance, great. I'm excited. I'm going higher, or at least I will, I'll kind of stick to that. But of course, don't get me wrong. We always have these false breakouts. We have these issues, and that's why we always have to be careful and only risk what we can afford to lose and have our stop losses in place. I get it. Sometimes it's boring, but unfortunately, trading can be as exciting and as boring at the same time. So you have to kind of always keep your head cool, have your stop loss in place, and always risk what you can afford to lose. And then this one, for example, although I'm leaning towards the upside, look, in general, everything's kind of working out here for me for the upside. We have a nice barrier, which is providing good resistance, but we're testing it again. We did, after testing it once, we did get our little correction here lower, and I said to you that whenever we break a trend line like this, like for example in this case a downside line, we revisit it from above, and if it provides good support, we rebound and push back up. So everything's kind of going, just kind of ticking all the boxes. Let's see if the breakout will also tick the box. And for now, I am, like I said, I'm aiming for the upside. But I need that confirmation break first. NZDCHF. Oh, by the way, we do get some numbers from Switzerland today. Let me just quickly double check. Did we get already some numbers? Yes, we got the CPI numbers from Switzerland. So inflation numbers, yeah. So those have declined. Okay, that's interesting. So basically, Swiss inflation, Swiss central bank, I think they will be happy about this because, okay, the month-on-month is 0.0. The year-on-year is 2.6. Most of the central banks have their targets around 2% inflation, so I think that the Swiss bank is quite enjoying this, and and that's why we're having a bit of a devaluation in the Swiss franc. Why? Because again, no rate hikes. Market participants are not expecting many rate hikes, and that's why we're having a weakening of the Swiss franc against some of its major counterparts, like NZD. And looking at this picture here, we're coming back to the upside here. We're pushing back above the 0.5572, and yes, I'm aiming actually right now for this 50-day EMA and this downside line taken from the high of the 24th of January. If we, for now, these two are my targets. I think actually I'm gonna put this arrow here just for the sake of it. Yes, this is gonna be my short-term target. If we clear this, great, wonderful. I'll go higher. I'll go higher. My next target will be somewhere around the lines of 0.5664 or maybe even higher. But again, later on. For now, that's the game plan. USDJPY, this one is madness. I mean, looking at this picture here, Okay, look, so far this is working out nicely. Look, I talked about this arrow this week. I said to you that yes, if we retrace all the way, first of all, I said to you that if we do drop below the 38.2, I'm leaning towards the downside. If we clear the 50, I'm aiming for the 61.8, and if we clear the 61.8, I am targeting further south. I'm aiming for these EMAs and this and these two trend lines. Boom. Fantastic. Great. I'm happy with this. This worked out perfectly. Now my question is, can we rebound? Well, given that we have the NFPs today, let's see if it has its effect on the US dollar. Well, most likely. So it's kind of a rhetorical question here, but will it have in a positive? Will it have this in a positive way? And let's say, can we rebound from this territory, this whole zone right here? So for now, I'm kind of sticking to that idea. But a lot will depend, of course, on also on the stock market. If the stock market rallies, then yes, we could see USDJPY pushing to the upside. Why? Because everybody will be jumping out of yen. If the stock market starts declining heavily, well, guess what? The yen will become very attractive again, and we could even see this one actually falling off the cliff here and moving through these upside lines here. And then yes, we'll just have to kind of reevaluate things again. We'll start aiming for that 133 territory, and then we'll just take it from there. So what's interesting here, first of all, I need to get rid of this Fibonacci. What's interesting here is that we need to look at the weekly candle, and you can see by the weekly candle, we kind of wiped out all the, I mean, you could have seen that on the daily as well, but on the weekly candle, it's clear. You can see that we have wiped out all the gains made last week. And after finding fantastic resistance near that 137.90 territory, looking at this, because that's the highest point of March, or in other words, the current highest point of this year, we've struggled to create a new high for this year, this week. And we drifted back to the downside. The question is now, can we see a reversal, maybe a push back up? And if we can, I am kind of considering maybe that more action could come in next week, especially on Wednesday with the US CPIs, and then we'll go from there. So maybe, that could give a boost for the dollar, for the US dollar against its major counterparts, and we could see, for example, USDJPY traveling nicely back to the upside. But at the moment, I am observing these two trend lines, these EMAs. If all of them provide fantastic support, great, I'll aim higher again. But at this point, probably the safer option is to wait for a push at least back above this 135.14 level, somewhere around here. And then we could, start examining maybe some higher levels, guys. USDCAD, just a quick update. Look, this one is beautiful head and shoulder, or sorry, not head and shoulder, double top pattern here. A beautiful hold up near this downside line, and yes, a beautiful break of the neckline. I talked about this this week, and I said to you that if we clear this neckline, my aim then is the 1.3488 territory, or even the 1.3448 zone, which is not far from that 200-day EMA. In general, I am targeting that 200-day EMA right now because we are below the 50 and the 100-day EMA. If we continue to trade below that, I'm aiming for that 200-day EMA. That's simple as that, honestly. Look, in general, this is my second least favorite pair to trade, but whenever it starts doing everything by the books, I like it. Whenever it doesn't do everything by the books, I don't like it. I mean, yeah, I know, obvious, but hey, I think that's, that's called kind of not very biased favoritism, but yeah, kind of. Anyway, look, for now, the question is, like I said, if we do stay below the EMAs here, if we continue to trade here, then yes, my next target is the 200-day EMA. First, I'm going to aim for this 1.3488. If we clear that one, yes, then I'm aiming for that 200-day EMA. Now, jumping into US dollar against the Mexican peso. Look, I'm not going to spend too much time on this one. I'm just going to give you a quick update because I talked a lot about this week. Once again, we flirted with this territory, this 17.8 90, and the question is now, can we see a nice push further south? Well, so far we're trading below this hurdle of mine. Can we stay below it? If we can, yes, I will go further south. If we cannot, maybe a beautiful rebound here could be possible, but as I said before, my preferred upside scenario, at least towards some higher levels, could come on a push above this 18.20 territory, somewhere around here. Yeah, and then we could, go aim for the 100-day EMA or even maybe the 200-day EMA. GBPUSD, haven't looked at this one for quite a while, but look, the upside line, I wouldn't say that everything's working here on my chart. I have to admit, GBPUSD is one of them that doesn't really kind of go with my analysis. I think that it's a totally kind of, it's a different. Maybe my approach does not work well with GBPUSD, and I have to admit that, because look, I don't know if all traders have, their analysis, their kind of methodology that is working on everything. No, I think the GBPUSD is one of those pairs where my methodology doesn't work, but I try to still look at it. I try to see some sort of logic, and at the moment, look, I have this upside line, but the fact is that it's not really kind of doing much with it, so just kind of hovering above it. I have my EMAs on most of my charts. It works. On GBPUSD it doesn't really always work. So for example, these are, sometimes it does, sometimes it doesn't, but probably I have to say that most of the time it doesn't, because yeah, it's not one of those pairs. But look, if you do like to trade GBPUSD, okay, I would say be cautious, be careful. We do have some data coming out today from the UK, construction PMI numbers. It seems like, yes, according to the economic calendar here. So we have those numbers coming out. Let's, of course, for now, we're moving higher. One thing that I think that is working here for now on a daily chart, for example, is let me just adjust this very quickly, and I think it's the 21-day EMA. So if you might draw this one on your chart here. This one's kind of working out nicely. I would say it's providing that hold up all the time. So let's put it this way: if we do fall below the 21-day EMA and stay below it, this could open the door to some lower levels. But at the moment, we're just kind of constantly rebounding from that 21-day EMA. Meaning that, okay, for now it's just kind of this is where I stalled. Because look, for now, yes, I will say this way: you can keep an eye on that 21-day EMA, but nope, that's not this one. This one like this. So for now, I'll keep an eye on that one, and we'll wait and see how this is going to play out. For now, I'm going to still keep an eye on this 50-day EMA. And my target for now is there we go. I have to kind of rewind here a little bit, because I think I've turned on my motor and I didn't stop, and this is where I've went off the road a little bit. But coming back to GBPUSD, look. If you want to go higher, I would say maybe this barrier here, the highest point of May of 2022. Is that correct? Yep. The highest point of May of 2022 it could be seen as a good barrier, good resistance area, the 1.2666 territory. If we do clear that, then yes, this could open the door to some higher levels. But look, what I'm considering right now for now is maybe if we do get a hold up there, near that territory, maybe a bit of a retracement back down here could be possible. EURCHF, also something that I don't look at very often, but occasionally I do. But here, for example, my EMAs are working nicely. And yes, so far they're providing good resistance. And I would say if we do want to go lower, I would need to see another drop below this territory. So below the 0.9775. Because we're currently pushing back above it. Okay, that's just a small positive sign here. But if we can stay above it, then yeah, great. I will go a little bit to the upside, but only for a bit of a retracement, because in general, we're still on a down move. We're still trading below this downside line taken from the high of the 31st of March. So in a way, any kind of move to the upside here could be classed as a temporary correction before another possible leg of selling. But my favorite wedge pattern could be the case. Now, if that's the case, that's a bit of a bullish indication, meaning that, according to all the TA rules, bearish wedge, a falling wedge, sorry, not a bearish, a falling wedge is seen as a positive indication and as a bullish sign, because this could eventually break to the upside here. However, as I've mentioned before, whenever I talked about wedges, a confirmation break is still needed. So while we're trading inside the wedge, we could still go down here. Once we start clearing the upper side of that wedge, great, I will get a little bit more excited with the upside. But at this point, I'm just observing the price action. I'm just going to keep an eye on it. If we do clear the upper side of this falling wedge, great, I'm leaning towards the upside, at least for a little bit. For the downside, well, this is where my targets are going to be coming in, and like, for example, something around these lines, 0.9706. If we do fall below the lower side of the falling wedge, ignore the whole wedge, and we could start aiming lower. EURGBP, finally, we're doing something here, but as I've mentioned to you yesterday as well, that look, we needed to see a drop. And I said to you that if we do drop below the 0.8792, I will aim for this upside line. But if we start breaking the upside line, I'm going to lean towards further declines. And I am doing that in terms of further declines. I mean towards this highlighted zone right here. Because what I don't want to see here is something of a range forming. So basically, if this is going to end up being a strong area of support, and then we see a rebound back up, then yes, we have ourselves a nice, beautiful range. A very wide one, but still a range. And yeah, then we'll just have to wait until we have some clarity here and we break through one of the sides of it. But at this point, yes, I'm leaning towards the downside. We broke the upside line. So from the short-term perspective, yes, my next target is the lower side here of this range. And then I will take it from there. If we do break through this, great, I'll go further south. If we cannot, maybe a bit of a rebound could be possible. And finally, EURUSD. So talk about ranges. And again, keeping an eye on the NFPs today. If by any chance the US dollar gets a boost and picks up some buying interest, well, guess what? We could see some further action inside the range. We could move lower. We could move towards the lower side of this range, and yeah, and that's no good for if you're looking for some sort of breakouts or something like that. If you're a range trader, congratulations, this could be for you. But if you're not, then yes, you'll have to just wait this one out. I know I will be. If I do get a clear breakthrough the upper side here of this range, and then we stay above it, then yes, that's where I'm going to get excited with further upside, and I'm going to start looking at some higher levels here. For now, I am just observing the price action. If we do fall, let's say, below the 1.1014 territory inside the range here, then we could see a move lower inside the range towards the lower side of this range. Again, I repeated a lot of same words, but kind of just have to point this out, guys. If we do fall back below the 1.1014 territory right here, I will aim for the lower side of the range here, and then we'll go from there. If we do break it, great. I'll start considering lower levels. If we cannot break that, maybe we'll just bounce around here for a little bit, for a while more. So yeah, guys, that's it for this session. It was quite a long one. I really appreciate you sticking around and watching this one till the end, honestly. Big bow down to you, because again, it requires a lot of patience, but I hope you found it useful in general. I really hope in general you find my videos useful. So really massive thank you for you joining in every morning. Maybe just for a little bit, maybe for the whole session, that's fine, that's absolutely fine, but you're helping me a lot. Basically, thank you very much for your views for your rockets, not likes, but rockets. And thank you very much for that. Thank you very much for your comments. Really appreciate that. So if you want to catch me on Monday, as always, 6 o'clock GMT time. Yes, so 7th of May, 6 o'clock GMT time, guys. But for now, have a beautiful trading day. Stay safe. Have your stop losses in place. Only risk what you can afford to lose, and everything will be fine. Thank you very much, guys, and I'll see you on Monday. Bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.